what's your best advice right now?
Yeah, Kelly, our economy clearly was moving along nicely. And if you think about it in a car, we hit a tree. We've never seen an economy really stop like this. And like you said, 10 million claims is what we saw the last couple of years, just about. So it's truly unprecedented. But really, I think it's naive to think what got us into a lot of this trouble, some of the action in the bond market and then in the oil markets. That's where the volatility started before it got to the stock market. We think you need some type of bottom in the oil markets. And today's news is really a quote unquote good thing that happened because we can get some type of low, some type of calm in the oil markets. Maybe that can work its way to the bond markets and to the stock market. Now, this has been a historically volatile year. We get it. This volatility is not going to go anywhere. But, maybe one potential bullet point is when you have a bad first quarter, April is usually a pretty good month, and historically that's kind of the playbook. So maybe a little bit of a bounce here, but by no means are we out of the woods in our opinion.
Mark, how much darker do the woods get?
Darker. One disconcerting aspect of today's UI claims numbers were that they were in places like Pennsylvania, Ohio, Massachusetts, and those are states where the lockdowns started first. So I live in Chester County, Pennsylvania, right outside Philly. We were one of the first counties in the country to experience a lockdown. So that would suggest all the lockdowns that are now coming, and you saw Florida, Georgia yesterday announced lockdowns. All those claims are coming down the road. So we've got a ways to go here. So it's going to get a lot darker.
So, Mark, some of the estimates that I'm seeing now, hopefully they can't get a whole lot worse because you have people talking about 30 to 50% declines in second quarter GDP and unemployment rate peaking at anywhere from 15 to 30%. Are you of the mind that the worse it gets, the sharper the rebound could be, or is it the worse it gets, the bigger the risk that something gets permanently broken?
The latter. I think when the economy is and financial systems are under such significant pressure, odds are pretty high that something else goes off the rails. One thing we know almost for sure will happen, there will be more business failures and bankruptcy, and that'll make the downturn more severe, longer, but it also make the recovery that much more difficult because people won't have jobs to go back to. Those businesses will be out of business. And if you look into the financial system, there are a lot of stress points. Now the Fed's done a really good job of keeping it all together. But the longer this goes on and the more pressure that's applied, those fault lines it'll be very difficult for the Fed to succeed. And if that happens, then, of course, the recovery will be very difficult. So
sure, yeah.
Under any scenario, it's hard to see the economy coming back quickly.
Brian, let's talk about the Fed and a lot of the moves that they've made so far, which in many ways are aimed directly at helping bond markets, fixed income markets, and other things continue to smoothly operate. Are they having success in that regard?
They're starting to.
Well,
Go ahead, Brian.
If you think about the magnitude, even if you can look at economist estimates, to think about 10 million people losing their jobs in 2 weeks, it's just mind-boggling. And then you take a big step back and you say, okay, how does cash flow get through the economy? Because that's what bonds are, right? And the answer is no one knows. So that uncertainty factor got so large that what the Fed did was necessary, and it's starting to help. So you can see thawing in the Treasury market and in the mortgage market where there are government-guaranteed cash flows. I think for an active bond manager like MSIM, this is really important because you can no longer say you like corporate bonds because you actually have to decide which corporate bonds is the money going to get to first, right? And it matters in small business, large business, mortgage payments, every industry now. You can't just look at the index and decide if you like it or not. So this gets really hard from here because we don't know how this will heal and we don't know how long it will take, but we know there are going to be problems.